In this video, I'm be doing the internal creditors recon. Now, the key word is internal. So when you do an internal creditors reconciliation, you're basically trying to figure out why are the balances on your creditors ledger, which is like the people you owe, different from the trade payables. Now, what's the difference between the balance in the trade payables versus creditors ledger? The balance in the trade payables are basically all your creditors who you owe combined. So basically, let's say I owe money to A and B, a person A and B. In the trade payables amount, it'll just be like the total amount of money I owe them. It won't say how much I owe A, how much I owe B. No, it just says, for example, I owe 1,000 Rand. Who do I owe like the amount to A and who I owe the amount to B? It doesn't say that. But in the creditors ledger, it'll tell me the individual amounts. So under the creditors ledger, it'll have like the person A, and it'll have their creditors ledger and how much I owe them. It'll have B and how much I owe them. So creditors ledger gives the individual credit balance that I owe them. Trade payables is everything together. Now, let's go on to the creditors recon. So obviously these things have to balance, because the total amount of individuals combined must give you the total amount you owe them, right? The problem is here, it's not combining, meaning that there is a mistake. So somehow we have to make them equal, but we have to do it via a correction. So this is where creditors recon comes in. Now this question says we must only look at 2 when doing the creditors recon. So we're going to look at 2. So 2.1, the total column of the purchaser's journal was incorrectly posted to the general ledger as 3,245 instead of 3,425. So if you work out the difference over there, you will get, okay, wait, firstly, before we do this, we have to bring down the balances. Trade payables is 105,206. So let's bring it down. So balance as per, well, I mean, you can say anything. Balance brought down, but this could be anything, right? So yeah. So the balance for trade payables is 105,206. 105,206. And the creditors ledger, so let's see. So balance brought down. So balance brought down and the amount is 109,836. So 109,836. Okay, so now that we brought out the balances, let's do the adjustment. So the total column of the purchase journal. So remember, the purchases journal are all like the purchases you made on credit. And if you look down, if you look at it, like if you bring up a purchase journal, you look down, there's a total column of the purchases journal. Now you made a mistake, because what happens is you take the purchases journal amounts and you put it in trade payables. That's what you do. You put it in the trade payables ledger. So obviously, you know, we're only going to be dealing with the trade payables ledger adjustment here, not the creditors ledger, because it won't affect the individuals, because from this purchase journal you're going straight to the trade payables. So if you look at it over here, what will be the adjustment? So the story will be correction. So correction of error, and then now what's the amount? So if you look at it, let's see. So 3,245 instead of 3,425. So you understated. So you actually owe more. So to work out the difference, you take that minus that. So this minus this, and you get 180 Rand. So it'll be positive 180 because you owe more. If I owe somebody 200 and I say I owe them 180, that's wrong. I owe them 20 Rand more. So that is why over here I'm saying 180 Rand more. The next one, 2.2. Interest on overdue accounts was not accounted for. Upon further inspection, discovered that there only one account that was overdue on our business, which is Soulmate. Of 1,600, the debit was due 6 months ago, charged interest of 8%. Okay, so basically in our business, we got charged interest, right? So we had to work at the interest. Problem is, it was never recorded. So whenever it was never recorded, it means it wasn't recorded in the trade payables account and the creditors ledger. So we have to basically record it in both of here. But now we have to work at the amount. So to work at the interest, it's simple, right? You take the outstanding balance, which is 1,600, times 8%, but it's times 6/12 because it's only for 6 months that's overdue. You work that out, you should get 64. So you can say interest taken into account, or you can just say interest expense, anything you want. And then also in the creditors ledger, interest expense, because remember when they say it's not recorded at all, it's not recorded in both the accounts. And the amount, let's see, yeah, if you work it out, it'll be 64 then, right? It's the calculation I told you, it'll be 64 then. Now it'll be plus 64, right? Yeah, plus 64, because you owe 64 of interest, right? So, right, this is supposed to be over here, but it doesn't matter. Let's see the third one. So 2.3, a credit purchase from Lucy Laces were incorrectly posted to their account in the creditors ledger. So straight away we're only dealing with the creditors ledger. At 4,500 instead of 450, we charged her too much. Think about it. It's supposed to be 450, but you charge that lady 4,500. So that's too much, right? So basically we have to bring this 4,500 down to 450. We overcharge. So we overcharge. For us to bring it down, we have to minus. So on the creditors ledger, we'll say correction of error. So correction of error, and we'll say minus the difference, right? Because we need to bring that down. The 4,500 minus something must give me 450. So it'll be, let's see, it'll be 4,050. If you work it out, it'll be 4,050. But it'll be minus 4,050. You just minus this, you get 4,050. So that's the answer. Because think about it, 4,500 minus 4,050 brings it to 450, which is correct. Okay. So it only affects the creditors ledger, because this mistake was only in the creditors ledger. The last one, the creditors ledger was miscast. So straight away we're only dealing with the creditors ledger. The total was 400 more than what it should be. So it's 400 more than what it should be. We need to get it down to by 400. You know what I mean? So you have to minus 400 in the creditors ledger, because it's 400 and more. But that's wrong. It must. So to take out that 400 and more, you minus the 400. Okay. So what happened over here? Okay, something is a little bit wrong with this computer. So again, here you can put correction of error, and you work out the amount will be minus 400. Hey, why is this thing disappearing, man? Correction of error, minus 4,000, minus 400. Now in theory this should be equal. Okay, so let's work it out. So now that it should balance. So let's see. So if we total all this up, okay, it gives me 105 450. Now moment of truth, this should also equal to that. Let's see. Come on, 105 450. Perfect. So because now the both balances are the same, that means they are 100% correct. So now this balance matches this balance, you see. So internal creditors recon, this is how you do it. Remember, internal, you only concentrate it in your business. Your business got a trade payables account and a creditors ledger, right? External creditors recon, it's actually the, you know, the one where they got creditors remittance advice. It's like that, because now you're correcting their statement. So that's why it's external. Also, creditors remittance advice is paired with the ledger. So ledger is like your mistakes and your creditors remittance their mistakes. So it's simple. I mean similar to the bank recon. So bank recon, creditors recon, debtors recon, all the same. In fact, debtors recon, if they have debtors reconciliation, internal debtors recon is exactly the same. Instead of trade payables, it'll be trade receivables, and instead of creditors ledger, it'll be debtors ledger, and you do the exact same thing, literally exact. So you see, so by just learning one thing like this, you already know the debtors reconciliation. So this is how you do it, this is how it's done, and this is the way to go for learning this section.